Demand for gold is strengthening as European leaders seek to contain the region's debt crisis. According to a Bloomberg survey, gold traders are the most bullish in 4 months after investors accumulated more metal than ever. For more on the metals market, let's bring in Edmund Moy. From 2006 through 2011, he was director of the U.S. Mint, where he was responsible for the nation's $100 billion supply of gold and silver assets. He's currently a senior executive for Morgan Gold, one of the leading private companies delivering physical gold to precious metals investors nationwide. And Mr. Moy joins us now from Seattle. Mr. Moy, welcome to Bottom Line. Thank you so much for joining us today.
Hey, Mark, great to be with you. And that great introduction is not going to get you a free sample today.
I didn't think that it would, sir. Talk to me about the rise that we have been seeing in the price of gold. Is that due to investors' refusal to buy equities, or is something else at play?
Well, the price of gold is really a function of supply and demand. It's not that tough. The supply is relatively limited and only going up slightly each year, but the demand has been very strong. As you said, investors in India and China are buying it at record amounts. Central banks are beginning to take a stronger position. Investors here in the United States are diversifying because of all the economic uncertainty.
Mr. Moy, what is going on in India and China? Why are they snapping this up?
Well, for several reasons. One is those are booming economies, and as people become more prosperous, they have extra money to begin investing in gold. Second, in those countries, there's a cultural affinity, like my parents, who were Chinese. I'm American-born Chinese, but they grew up understanding that gold should be part of your net worth because it's a storehouse of wealth that will remain regardless of what the government policies might be.
Sir, what short-term pressures might make gold vulnerable?
Well, I think there's a couple things that people ought to take a look at. The first is the European debt crisis. The second is the price of oil. And the third is whether or not our government can come to some type of agreement to bring our massive deficits down and hopefully in a surplus position. Those things, if you believe that those things are going to happen, then there's going to be some downward pressure on gold. But if you believe that those things are going to persist or, from my view, have gotten worse in some cases, there's still going to be strong demand for gold.
Mr. Moy, talk to me about what we're seeing institutional demand-wise and also hedge fund demand-wise for gold. Is this surprising you?
It's not surprising me, again, because there's this supply and demand for gold. There's all this economic and political uncertainty that more and more both individuals and institutions are taking a look at gold as a way to diversify from just your paper and electronic assets.
Well, what's the outlook for the price of gold and for coin demand, and what will be the main factors affecting price and demand?
Well, the main factors affecting price and demand are going to be anything that creates uncertainty around the value of the dollar. If there's any indication that the dollar is going to be devalued, whether through inflation or quantitative easing, all of those issues, anytime the dollar is threatening to go down, gold goes up.
Mr. Moy, how has the surge in demand for exchange-traded products backed by gold affected coin sales, and where do coins, bars, and physical gold fit into the mix?
Yep, both are strong. I am a physical gold advocate, partially because I was director of the Mint, and that's what we made, our American-made gold bullion coins. The difference between physical gold and something like an ETF is physical gold is something that you can hold on to that nobody can take away from you. Whereas if you buy an ETF or any other proxy for gold, it's not the same as ownership of physical gold.
Mr. Moy, we have about 30 seconds left. I have to ask you about your reaction to Republican presidential candidate Ron Paul making the case for a return to the gold standard during an election year. Do you have any thoughts on that?
Yep. Well, I don't know if I have any thoughts on that, but Ron Paul's been a very good investor in gold, and over the last decade, he's probably made a bundle, just as I have decided to diversify my own portfolio. I've gone from a nominal percentage to about 10%. Part of it was buying a precious metal IRA through a company called Morgan Gold, but the other part is being director of the Mint. I saw so many people. Our gold demand went up 550% during my tenure, and I want to be part of that.
Edmund Moy, he was director of the U.S. Mint from 2006 through 2011, currently a senior executive for Morgan Gold, joining us from Seattle. Mr. Moy, it's been a pleasure. Thank you so much for your time today.
Hey, great to be with you, Mark. Thank you.
Thank you, sir. Have a good weekend.